So I want to ask you, you have so much exposure here in the U.S., but also in other parts of the world, not only with individual investors, retail investors, but institutional clients. Are you seeing that trend? Are you seeing a trend of quote unquote sell America? That B of A survey says 82% are looking to reduce their U.S. allocations.
We are certainly seeing more interest outside the U.S. than we've almost ever seen before. The U.S. used to be a bastion of stability and certainty. Right now, people are questioning that. You're seeing a lot of gyrations in the marketplace built on gyrations from administrative policy changes, and that's really driving a lot of our clients to think through where they want to invest. What's becoming really, really clear, Frank, within that is that people are not willing to just let passive indices drive their portfolios anymore. People need to think about how to invest differentially, how to find idiosyncratic opportunities, high-quality names, et cetera. You can't just let the tide lift all boats and park money away in passive right now. You have to stay dynamic.
All right, so you're saying active investing is what's all about right now. So as part of that active investing, where are people looking for opportunities? You're one of the biggest ETF issuers here in the U.S. I'm looking at some of the ETFs and also mutual funds you offer. One that comes to mind is the JEMB, the Janus Henderson Emerging Markets Debt and Hard Currency ETF. Is that a place that people are looking for opportunity as they get away from the dollar?
Yeah, yes, I think so is the short answer. You're seeing it certainly from our flows perspective. I'd bucket where people are looking into both fixed income and equities and also a combination. First, on the fixed income side, certainly looking at more investment grade ideas, areas of higher quality, whether that be investment grade corporates, whether it be, as you mentioned, JEMB, which are our emerging market debt areas, more sovereign, more higher quality areas. You can certainly look at areas like municipal bonds and a set of ETFs that we have as well that are more around the securitized area. One of the most successful ones there are AAA CLOs, so very, very high quality on the fixed income side. Equities, similarly, there are a couple flavors of where people have been headed and where we're recommending people to go. One of them is very much around high-quality companies that have been pulled back, kind of baby thrown out with the bathwater. By the way, I'd say Janus Henderson is one of those from a stock perspective, but baby thrown out with the bathwater type companies. Things that were a little bit out of reach before, but have come back down. In technology, in healthcare, there's been quite defensive in some of the large cap areas. In our small and mid cap areas, we see plenty of those opportunities too.
So, Ali, if you don't mind, can I get a little bit more granular with you? So more than half of your asset under management, it comes from brokers, banks, RIAs. Are they also advising their clients and their customers to move away from the U.S.?
I think they're saying diversity is where to go. Make sure they have a pretty diversified portfolio. Again, until just recently, the non-U.S. indices have certainly done better, and you can certainly find some gems in those areas. I think people are really digging down into your very word, going more granular on where to invest. For example, just because a company is listed in the U.K., here where I am right now, doesn't actually mean they're necessarily a U.K. company. It certainly can mean that they have a global footprint that is driven by innovation in other areas. So I think what you're finding is this world of uncertainty, this world of complexity, is creating a lot more granularity in thinking through the underlying, as opposed to just kind of blanket invest in this area, invest in that area, or certainly not invest just in a passive index.
So, Ali, speaking of your global footprint, again, I'm looking at your numbers here. About 10% of your assets under management are in Asia Pacific. I would imagine a significant part of that is in the China region, maybe Japan. Are investors there specifically saying they want to get out of U.S. assets? Then about a quarter is in Europe, Middle East, and also Latin America. What's the response there? Are you seeing any type of similar action when you're looking at the assets under management there? And I would imagine it's a mix of institutional, self-directed, and also RIAs, brokers, and things like that. So can you just give us some more color and granularity there?
Yeah, absolutely. So if you just start going through the regions, if you think about what's going on in APAC for us, you're clearly seeing an opportunity for a lot of our APAC investors to ask for being more in Europe, actually, a little bit more in Australia, and looking at the Middle East as an opportunity. That's one of the big surprises, I'd say, Frank, over the past few months. Has been a lot more interest, particularly from Asian investors, to look at opportunities to invest in the Middle East. Thankfully, we have opportunities to invest in the Middle East here at Janus Henderson, whether it be on our privates fund or some of our public opportunities as well. But that's a really interesting new tie from a commercial perspective that's being created in Asia. In Europe, there's no question that there's a little bit more buoyancy to the marketplace here. A lot of investors who had parked money away in the U.S. in passive funds are certainly coming back and seeing opportunities not just in the U.K. marketplace, but certainly continental Europe as well. You saw what happened in Germany. Germany, I think, acted with easing at exactly the right time, and you're seeing some companies benefit from that, and investors of our clients trying to take advantage of that as well, Frank.
You know, Ali, we got to get going in a second, but I have to ask you one big question. We're talking a lot about this. What is your view on U.S. Treasuries? What's your view on the U.S. dollar when we're talking about investing?
Well, look, I think right now, given so much uncertainty, I understand why they've both pulled back, or the dollar's pulled back and Treasuries being more challenging right now. I think that's a situation we're in. Unless there's more certainty right now, that's where you're going to get. You need a little bit of certainty to invest in the marketplaces. I still think, though, on the one side of the coin is uncertainty and worry. On the other side is opportunity, an opportunity that our 340 investors at Janus Henderson focus on delivering for our clients all day long.